Hello and welcome to another week of Trading Opportunities. Now, for those of you who watched last week's market commentary video, you will recall that we looked at a number of instruments that we were going to be stalking over the coming week. Specifically, that included the crude oil, gold, silver, the Aussie US dollar, and the pound Aussie dollar. So as part of this week's commentary, we'll take a quick look at what happened with those instruments, and then we'll look at opportunities that might be setting up this week as part of our watch list. First up, let's take a look at the dollar index. Well, as you can see on the bottom right over here, the monthly chart is still in an uptrend. The weekly chart is also in an uptrend. It's also coming up to this level of resistance that we identified here at 98.31. Now, if we look at this more closely on the daily chart, you can see the price action around this level over here and over here. So we are in an uptrend. However, before looking for any trade setups, we would want price to break convincingly through this 98.31 level before we would be looking for any trade setups. So at the moment, we are sitting on our hands waiting for the price action setup to present itself. Let's now take a look at the euro-dollar pair. And as you can see here on the monthly chart, we are still in the downtrend. On the weekly chart, we are in a range between 1.1467 and 1.0809, as you can see here over the last couple of weeks. However, we do have a bearish bias, and that's confirmed by these candles over here. Looking more closely at this on the daily chart, you can see that we've had a series of lower highs and lower lows. So we are in a downtrend on the daily chart too. However, before we look for an actual trade setup, we need price to break convincingly through this level of support over here at 1.0809. You can see that price has touched it over here back in May. We also touched this level earlier on in July. And what that tells us is that there is a higher probability of price coming down, testing that level, and then bouncing off again before breaking through the level. So because we only want to trade high probability trade setups, we will be looking for price to break convincingly through this level of support over here to the downside, and we'll be looking for price action setups after that happens. Let's now take a look at the British pound US dollar. So the monthly chart is in a range actually. We have made a higher high and a higher low over here. However, it does have a bearish bias to it. If you look at the weekly chart over here, we see we're ranging between these two levels here. And on the daily chart, you can see it better that we're ranging between 1.533 and 1.5671. Now, whilst the daily chart does have a bullish bias in that we would be expecting price to break through this level up here, we will actually be looking for price to break above this level over here, breaking above the 1.5952 level to confirm that we are now in an uptrend. So on the cable, we won't be looking for any trade setups until we break through that upper level of resistance. So to summarize that, the cable doesn't really present us with any opportunities in the near term, so we'll be sitting on our hands on this instrument. Let's take a look at the gold contract that we spoke about last week. Now, you'll recall that on the monthly chart, we were in a downtrend. Well, we are in a downtrend. On the weekly chart, we are in a confirmed downtrend. And on the daily chart, we're in a downtrend too. However, you can see that over the last week or so, price has been bouncing between this upper level of resistance here and this lower level of support. So we don't have a clear direction at the moment on where price is likely to go. So we consider this to be a range-bound environment, and we would be looking for price to either break above that to start entering into a new uptrend, or break below this level over here of 1.073 to carry on with a downtrend, and then we'll be looking for setups. But you will also recall that this red line over here is actually identified as a very strong level of support, and that can be seen going back to 2008 over here. So we are expecting price to react at that level before giving us a clear direction on where price is likely to go. So by way of an update, we are still waiting for a setup on gold, and no trades were taken last week. Let's have a look at silver. Now, silver and gold are normally highly correlated, as you can see here. We do have a range-bound environment again, with price really oscillating between this 14.3 level and this 15 level over here. So again, no setups on silver either. So we'll be waiting for a trading opportunity over the coming days or coming weeks. Let's take a look at the Aussie dollar, US dollar. Now again, the monthly chart is in a downtrend, the weekly chart is in a downtrend, and the daily chart is in a downtrend. Now, during last week's commentary, we wanted price to return to this area over here before we'd be looking for a setup to the downside, meaning that we would be looking to sell this instrument. So no setup at the moment, and we'll continue to stalk this instrument. Let's now take a look at the pound Aussie dollar. And as you can see from the monthly chart, we are still in a very strong uptrend. On the weekly chart, we're in a very strong uptrend. And on the daily chart, we're also in a very strong uptrend. Now, you will recall from our market commentary last week that we were waiting for price to return to this level over here so that we could look for a price action setup to the upside. However, to date, this still hasn't happened. So at the moment, sitting on our hands, waiting for the opportunity. Now, let's have a look at the crude oil contract. Now, this is an instrument that we identified last week as part of our watch list. So just to recap, the monthly chart is in a downtrend. The weekly chart has been in a downtrend since April this year. And the daily chart is also in a downtrend. Now, last week, we identified that if price returned to this zone over here, we would be looking to short or sell this instrument if we had a price action setup. Now, that setup did present itself on Thursday last week, and we entered the trade on the break of this candle over here. Now, as you can see, the trade has moved very nicely in our favor, and we are almost at our fourth profit target. So we've locked in a decent amount of profit. Specifically, we entered short on the break of this candle over here, and the trade went in our favor. In addition, we've also moved our stop loss closer to the price, which means that we no longer have any of our original risk capital on the table. So all in all, we're actually in a free trade and in a healthy profit too. However, you can see that we've identified this red line over here as an area of potential support. So we're expecting price to react around this level because it is a very strong level that we picked up on the monthly chart going back to the late 90s. And what this means is that there is a higher probability of price reacting around that level, possibly returning back up to the zone over here before breaking convincingly through this 45.4 level to continue with its downtrend. So at the moment, nothing to do other than to manage our trade and let the market do what the market will do. So I hope this has provided you again with some insight into how we identify potential setups, how we then stalk those trade setups, and how disciplined we are in only taking the very best trade setups that align with our strategy criteria. And this is where so many traders get it wrong, is that it takes discipline and patience to only wait for the very best setups to give you a high probability trading opportunities. And that's where we want our trading to be, and those of our customers and our clients and the communities we work with as well. So hope you enjoyed this video, and do get in touch if you have any questions, and look forward to speaking to you again soon. Thanks for watching.